Yo, boys, what is going on? Today, I'm going to be bringing you guys a video on sequence projection. Sorry in advance, I'm a little stuffed up here. And then also, I'll try making at least one video a week. I've been kind of lazy lately, but I'm going to start making some more videos for you. So this sequence projection that I'm going to show you is something that I learned from Skinner, but basically what you're doing is you're projecting a block of price into the future to try and predict rejections. So you always, when you're doing this, you start at the low. My chart's actually inverted here, but you can do it from either direction. It doesn't really matter. But we're going to use this as our low. Okay? Everyone can agree this is your low. This is the high after the low, where we've gained some level of importance. And you can see right here, this was a level of importance because this continued the move down to the lows when we retested that. Okay? So now you want to find the failure, okay? So here's your high, this is your failure. So let's put a line there. Now you want to pick the level that started the move up, preferably somewhere that you pumped from. So where did we pump from in this sequence to continue this move up? It would be right here. Once we retested this, this started this move out of this range. So right now, you would be projecting this into the future to try and find areas that you're going to reject from. Okay? So I'm going to delete all that, and now you do a fib pull from here to here. And I'll show you my fib settings. Whenever you're doing indices, crypto, you use multiplications of 4. Whenever you're doing stocks, you do multiplications of 6s, okay? I am on NASDAQ, so multiplications of 4. So what you'll find here is you have levels that you're holding to continue the move up, okay? And you can see all the way up here, it's projecting failure points. We've failed and rejected, and now we've came back rejected at this level. Okay, so you can see how powerful this can be if you're drawing your sequences correctly. But basically, the point of doing this is to give yourself an extra layer of confirmation on however you trade. So say you do support and resistance, okay? I think that this area right here is support, okay? So you could draw a fib to help give you extra confirmation on your level. So you do this, and now you're seeing, okay, this is also lining up with my level, which gives you an extra layer of confluence. And also, if you're trading in a range that you're not sure about, like you can't qualify any levels, so say you're all the way up here, and at this point in the range, there's no area of significance besides the fact that this is the higher low that you want to be holding here on this structure. But if you did your fib pull and you saw, okay, there's also a level here, this gives you that extra layer of confidence to say, okay, this is the level to lose and retest to continue this move down. Okay, so now let's go over to gold. So I'll do this again here on gold. Okay, we can all agree this is the low. We're going to use this as the low in the sequence. I think we can all agree this is the high after the low. Okay, where we gained something, some level of importance, which to me, the first level of importance was here on the level that took you down to create that low. Okay? So now you need to find the failure. The failure would be here, and then if you're going to use this as your swing always has to be the higher low. So generally, if you're going to pick this would kind of act as a new low, so you would want to pick the higher low of that, which is here. So you have, this is your rejection point, and you have that as your swing. So now let's do a pull from here to here. And let's see what we see here. Okay, swing, okay. Came down, held here, currently holding there. Okay, swing rejection here. Rejection from the peak here. And we've also qualified that this is an untested level here. Yeah, like barely front ran that. Anyways, a level that's not tested is generally a magnet for price. And to me up there, it looks like it hasn't been tested yet, but you can see how powerful these levels are. Okay? Now let's go over to crypto. So the time frames that I would suggest doing these polls on would be, you know, a monthly, a weekly, a daily, a 4-hour, and the lowest I would ever go is the 3-minute, and I wouldn't go anywhere in between. You could do it on the 1 hour too, but I wouldn't do it on like the 15-minute and stuff like that. But if you're gonna go to the 3-minute, here's another example here. Okay, I think we can all agree this is the low. And this one, there's not much price action here. So, I mean, the first level where you gain something, it's, sorry, my magnifying glass, is right here. Because this was the failure that continued the move down to the low. But, so this would be your high. The failure that took you down to this swing here, you can't really see because you'd have to go to the 1 minute. So you can just pull from here, or you could go into the 1 minute and be more precise if you wanted to. But we're going to go from here to here, and we're going to pick this swing here because this is the level that started this move all the way up here that we started pumping from. Okay? This started that. And you can see gain, hold, rejection, came down, held, lost it, regained here. Okay, this is what I mean by an untested level too. At this point in the price action, we had this very important level here, which was a level that we retested that took us down to create this low here. Okay, you can see it right from this candle and from here on this whole range. And it also never tested the fib. So we pumped so hard here that we never came back down and retested this level. So this is an untested level, which acts as a magnifying glass for price. Or a magnet, sorry. Acts as a magnet for price to come back to. Now we come over here. Let's pull this over. What do we see? It comes and hits it perfectly over here. Okay? And rejects from it. So that's what I mean about untested levels. Now you see we kind of messed around here for a while. Regained, pumped. Regained it, tested it here, pumped. Rejected from it up here. Came back down, started holding it here. regained, absolutely skyrocketed, got rejected from the one up here, and so on and so forth. So you can use this on the monthly, the weekly, the daily, any one of those time frames is something you can do it on. And I'm going to show you guys another way to do this as well. So you can do this same projection on any of those time frames, but you just go to the swing. So this would be the swing that took you up here, and you can just do a simplified pull from here to here. Okay? So from this pull, we were able to identify these levels here, which acted as the swing that took you up here, which acted as the swing here, where we lost it and retested it. And it acted as a rejector here. And it's still acting as a rejector here. Okay? And you can do that same thing on, you know, the 3 minute of a different time frame. If you're going to go very low time frame like that and you're going to use that as your low like this, if you have another low that's right next to it, generally I've found that the one that has more volume tends to get better reactions from it. But you can see here on the 3 minute reactions from your level. And generally, crypto reacts pretty well to sequence projection, mainly because algos use sequences. And then I'll show you guys the last way to do a sequence projection, which is basically for identifying the trend on a long-term time frame. So you're going to only want to really do this on the monthly time frame. So in this whole sequence here, you have a failure here. A failure to continue the move up that led to this swing low here. Okay? Now your other failure is right here. The level that we failed to continue the move lower here. So you take a simplified pull from failure to failure. Okay, makes sense. Makes sense. And what you've found is this is your midpoint. Okay, so for a trend reversal, what you're looking for is a gain and retest of this level to continue the move up. Okay, so those are the 3 different ways you can use sequence projection. And I don't want you guys to just do a sequence and say, okay, it hit my level, I'm taking a trade. However you guys trade, whether it's support and resistance or whatever, because I'm assuming that you guys are making boxes for, oh, I want to trade from this level, whatever. You can do a sequence projection to give you an extra layer of confluence on how you're identifying your levels. So you don't want to really be using this as a priority. You want to be using it as a confirmation. Okay? So I hoped you guys enjoyed this video. And if you guys have any questions or would like me to make any other videos about sequence projection, just let me know in the comments. And peace out, guys.